Hey guys, welcome to today's video. My name is Ryan from ArtiumPro. We're going to be going over liquidity, how to trade from liquidity and inducement zones. I'm going to break down a typical look that you will see in the market a lot of times and where you have a lot of buys and sells and the reason why people stop out a lot. So in this little diagram, and then I'm going to show you on a real live chart how often this occurs and how you can benefit from it with your trading. So you can see this is a typical down movement. You really have a little inducement area before a bigger drop to the downside. And once we have this reversal, people are going to be thinking this is the bottom. And we're going to start moving up to the upside. Well, then whenever we reverse and we start going back down to the downside, people are going to be looking for this equal low to take place. And then you're going to start getting some buys right here at this equal low spot. It continues through and breaks through, and people will have their stops right below where they think this equal low is going to be created. Your stops get placed here, which is going to be your liquidity. It breaks through those stops, stops people out, and then reverses back up to the upside. Now, once we break back up, people are going to get in buys right here. Now, you still have a lot of zigzags through this area. So somebody would be going into buys and still some buys would get stopped out because they have the stop loss too tight. And they could catch this movement all the way back up the upside, which would be a great trade. Now, people who are doing smart money concepts is going to be more patient. They're going to wait for this order block to appear up here at the top. The order block's already going to be here. They're going to be looking for this movement back up here to this order block. So price does get back up here to the order block. I think, man, I'm going to have a good trade here. I'm going to enter right here at this order block. We're going to get rejected. We're going to move back down, and we have 2 points of interest. We have this point of interest right there, and then we have this other point of interest right here. That's what this rectangle box represents, is your 2 points of interest. Now, once we were at this order block and we took a sale, people are going to be putting their sell stops right above the top of this liquidity. As soon as your sell stops get taken out, you see a reversal back down to the downside. Now, you can't tell me how many times this has happened to you, especially if you trade often, that immediately after your stops get taken out, you see a reversal. Now, one of the things I want to recommend to you is just to be a little bit more patient and look for these longer moves. Because your smart money concepts, your institutional tradings, your banks and stuff like this, they're going to want to be taking out these stops, whether it's on the buy side or the sell side. And then you can catch the big movements. This is the line you want to be on. Right here. If you wait for these, you pretty much know where your buy stops and sell stops are going to be. You want to purchase right after that. Or if you want to wait for confirmation, you can buy on the upswing or the downswing of the order block range. This is going to put you in the best spot to maximize your win rate and to maximize your risk to reward ratio. Now that you've seen it on the whiteboard, let's go and take a look at real live markets, and that way you can see it play out in real time. So we're going to look at Euro USD. We're on the 15-minute time frame. Let's go on up to the daily. We're going to get our bias. So this is going back 10 years. You can see that we are in a downtrend. Now from 2018 to 2020, you can see a lot of trend line liquidity moving to the downside before we had a reversal back up to this order block here before making a good move down to the downside. Significant down move followed by a reversal main chalk, and we're moving back up. Here's a great point of what we went over just a little bit ago where we're moving down. You can see this. Zoom in a little bit here. This is on the daily, of course. You can see this movement here. People are going to be saying 3 or 4 days went by. We're going to be seeing a reversal back up right here. And you can see what it actually did. We went down. We barely broke this sell side liquidity. People were looking possibly for equal low. We moved just slightly below it before reversing back up to the upside in a big move over the next few months. Same thing in particular right here. Look at this. We sold off. We broke back below this. And then the days following this, 4, 5, 6 days, we had a big reversal back up to the upside after this break. So I want you to change your mindset from retail trading SMC to institutional trading SMC. Now, a lot of people come from the retail trading side and they don't really put their, have enough patience to wait for the right spot. Now, because we are moving back up currently, we're going to be holding a lot of our trend lines here. Our liquidity is going to be really, really tight as we move up. And you can see that's exactly what's going on as we zoom in here. You can see we're making higher highs, and then somebody may expect a sell-off through here. We're trying to get into sales, and we're maintaining this push up, showing buying momentum. Now, if we look over the last few years, I would say, without a doubt, this high to me is going to be protected. These protected highs, I don't foresee being broken. So when we're looking at the bias, where can we see price realistically go? Now we can see right here we had an order block. Basically tapped into this order block before reversing back down to the downside, and now where can we see price going back up to before getting rejected? So what we're going to do is I'm using the ArtiumPro indicator. So what we're going to do right now, we can see these bear order blocks. I really feel price could go above these order blocks sometime within this year or closer to 2024. You can see how price has moved. I really expect price to go up here in this area. So what we're going to do is we're going to in settings, we're going to go down to the main structure order blocks, and we're going to change the amount on the active side up just a few. And we're going to change this to 10, and we're going to add another 5 order blocks to this side. Now you can see how powerful this indicator is, and I really like these particular 3 as possible areas we can see this price to go towards. Now you got to understand we are on the daily, and we have not even started refining our entry points. But if we feel like price long term is going to go up towards these 3 order blocks over the next year, then we would know. Obviously you protect yourself with your risk management, but obviously we're going to be looking at for majority buys during this movement. So as we start to push up and we start refining our entries, we're going to be looking at these bull order blocks for entry points to move up. You could definitely, the reason why this is the case, you can see this downward movement down. I mean, if you were to draw this out, it almost looks like, besides your up and down movements, it looks like a line. You can definitely see a V shape that's already formed. Okay, so if you look at this trend line, basically inducement liquidity right through here. You can see that really, you could have said this was the V formation for the reversal, but it wound up being this one. So we went back down, we slightly broke this, and then we created the V that created the change of direction. We definitely have a V formation. Could it sail back off, create a new lower low, and then reverse back up? Of course it could. That's the reason why we have risk management. But we do have the V formation started, and this will lead to higher prices. As we do our buys, we have a risk management in place. If it sells off, we're going to be looking for another setup. Now, if it continues down and creates a new or lower low, then we can re-look for buys after that next confirmation. So this is what the hour looks like. We created the low. We tapped in this order block a little bit here. We started making higher highs and higher lows, and we're moving upward. Now, right here, we had our trend line liquidity. Looks like we had this trend line liquidity. We broke out of it to the upside, created higher highs, and then we actually followed this trend line liquidity back down before reversal back up to the upside here. So our lows on price ranges are a little bit over 102, and our highs are a little bit over 105.3 right now. Now if we go back up to the daily where we thought prices could get to, we're looking at 116 to 119 range. So we know prices have a long ways to go to where we figure price will go over the next few years. Now, if we go back and start refining our entries, and we're on the 5 minute, and we're looking for these bigger movements, right here would have been a great place. We have this bull order block here that was created. We know this is our first point of interest on the 5 minute. And basically this would have been a 7.6 risk to reward ratio that you would have hit. And as soon as price hits your TP and you break through it, you're starting to see a reversal back down towards these order blocks. The top of this trend line liquidity could be validated as new support to get a bounce back up to the upside. I want you to basically open your eyes up to these types of movements. Bigger, longer trend movements, and these are your big smart money moves. Okay, so basically let's see if something like this happens and we start taking out these stops, people who are looking for buys through here, and then we start taking out these stops, and then we start moving lower to the top of this trend line liquidity, and we'll get an explosive move to the upside. Now, if you can train your eye to start looking for these bigger moves, your win rate, like I said before, is going to be higher, along with your risk to reward ratio will be higher. All right, guys, if you have any questions or comments, leave them down below. Let me know what you think about the video. If you do trade SMC, if these are kind of setups that you do look for, let me know down in comments. If you'd like to try our indicator ads, you can go to ArtiumPro.io. Also, after you sign up for the indicator, you're going to get an email. Make sure you join our Discord community where you can communicate with other smart money concept traders. Hope you have a great week, great Christmas and New Year's, and we will see you on the next video. Take care.